The Australian share market has been smashed this week, suffering its worst 5-day run in 3 years. SBS Finance editor Ricardo Goncalves joins us now. So there's been $70 billion wiped out.
Yeah, Anton, a string of excuses can be offered for the market's lacklustre performance. So take a look at this. It's how the Australian share market performed this week. Down 0.7% on Monday, then 1.7% on Tuesday, then further declines. For the week, 4.6% lower, closing below 5,500 points. Rising bond yields on the back of potentially higher global interest rates, along with Greece debt fears and concerns about our economy prompted the selling. Yesterday's poor trade balance data really spooked investors, and that could continue next week.
Firstly, we've got the Greek negotiations, as I say, but the other thing is that we've got some key data points, the most notable of which is the US jobs data, as well as trade data from China.
Now, those numbers will be out before trading begins on Tuesday because of a public holiday in much of the country on Monday. A closer look now at the way we closed today. The All Ords down 5 points. The banks have been hit hard. The Commonwealth has now lost all the gains it made over the past 12 months, despite hitting a record just months ago. Resource stocks were mixed as the price of iron ore rose overnight, and blood products maker CSL was one bright spot on the market. In Japan, the Nikkei moved away from its 15-year high. Shares on Wall Street finished lower. The Australian dollar is still seeing a bit of pressure following yesterday's trade deficit blowout. It's weaker against most of the other major global currencies, and on the commodity markets, both gold and oil are weaker. And after the markets closed today, Nine Entertainment, which owns Channel 9, issued a profit downgrade. It says the free-to-air advertising market in the second half will be softer than expected. Anton and Janice.
Thanks, Ricardo.